Nigeria's revenues for March fell 13% to 299 billion naira as the sharp fall in global crude prices continues to hit hard at the government's revenues. But Africa's largest economy has over 5 trillion naira in pension funds. CNBC Africa's Wole Famirewa spoke to David Uduanu, Managing Director, Power Pensions, to explore ways pension funds can be used to stimulate economic growth. Take a look.
All right, Dave, thank you so much for coming in today. We're discussing pension funds and the economy, and it's a time of shortage. But everyone speaks to the pension fund build-up that we have in Nigeria as perhaps the one clear source of financing to fix things like infrastructure, but we still see progress being relatively slow there. Maybe we should speak to, first of all, the reasons why it has been so slow before we now talk about what the pension funds can do and how we can unlock those pension funds. But your thoughts about why we've not seen as much investments into things like infrastructure from the pension funds?
Okay, so pension funds traditionally during the build-up phase do not jump into infrastructure. They start with fairly safe assets. So today at $25 billion, maybe there's a case for infrastructure investing. However, the asset class is still not investable. Meaning that there are no instruments with the appropriate guarantees and the risk mechanism and returns that pension funds can invest in. So we are in the middle of a lot of discussions with the government, potential issuers, to see how to unlock the pension fund potentials in infrastructure. And some of the discussions are around infrastructure specific bonds that will be guaranteed by government, or some government agencies with some sort of wrapper. Some are in the power sector potentially, where there's a bit of a challenge with resolving the issue around there's no gas supply, but more importantly the discos are not well capitalized to do the work they're supposed to do. A lot of them are heavily leveraged even at the investor level, and therefore just have no capital. So there's a lot of talk, discussions are going around how maybe pension funds can invest on the back of government guarantees. But it's still very early days, and there are no concrete decisions reached yet.
Right.
On the other hard infrastructure like roads and all of that, I don't think that we are ready for that now, because the framework for private sector investment in road is not very clear.
Well, many will say that there's just this conservative style of investing for Nigerian pension funds in particular. We've seen some rule changes over the years that maybe made it a little less conservative, looking at different types of pension funds within the RSA management system. But what can we learn from places like Chile? Because to a large extent we are copying the Chilean model. It seems to have worked there. We've seen pension funds invested into infrastructure quite easily. Why is it more difficult here? Is it political will? I mean, what do you think is the missing element?
Well, it's a bit of a number of things. So last year the World Bank organized a conference in Cape Town where we had operators from Mexico and some other Latin American countries. And I was on a panel with the guys from Mexico, and it was interesting because what the guys said to me is that, look, almost all the investment in infrastructure in Mexico has been guaranteed by government.
Right.
So the primary instrument they use is bonds with some sort of either guarantee or credit enhancements. And and you have to understand, we live in a greenfield infrastructure environment. So it is very little that pension funds can do in the area of going to build greenfield infrastructure. Now, what we believe is that either government or a company like Garantco can put some sort of guarantees on the table to allow pension fund invest in that phase where they are not willing and able, not just willing, not able to take the risk of greenfield assets. There are so many things that could go wrong.
Right.
There's government, political instability, changes in policies, contractor failures. There's just so many things. And remember that pension funds, the way they are structured not to invest in that directly in infrastructure projects.
So they look for products.
They look for products. So, but we're also trying to see if there's a way we can get access directly into infrastructure. We had an interesting chat meeting with Fashola, who is the Minister for Power, during our retreat. And he was quite willing, he understood the challenges and he was very supportive. And we've, started having that engagement. So I think it's important that the public understands that it's not that the pension funds are unduly conservative. Pension funds, by their nature, are conservative institutions. But at the primary thing we're trying to do is to ensure that we invest in infrastructure in a way that allows the capital to come back and for returns to be above inflation. And we have seen clearly many cases of project failures, but I think we are getting very close to clearing that, to overcoming that.
It's great to hear that there's engagement with the Minister of Power and, of course, you can say Minister of Infrastructure, given his portfolio. But let's move on to another area, which is housing. Okay. That is another area that everyone is wondering, why can't we get those flows into housing? And we've seen some tweaks to the regulations as well. People can now use their pension fund savings as part of their equity in housing project. But is there a mismatch between, those, like you said, that need to develop the products, and of course the pension funds that will invest in these assets? Do you think that is also a problem here, or is it still around if you like, the sovereign environment and the need for guarantees for things to work?
Well, housing is slightly different. For housing, the challenge with housing has always been on the demand side. The fact that because of the high inflation environments, mortgages are very high, mortgage rates are very high, and therefore not affordable. I think that's the first point. So what government tried to do over the last 2 years is set up the Housing Refinancing Corporation, Mortgage Refinancing Corporation, which has been done now, and they issued a bond. Now the whole idea is that corporation is supposed to then fuel liquidity into the mortgage sector. The mortgage sector in Nigeria has really not taken off. The mortgage banks, for all practical purposes, are not really more. They're just structured as regular banks.
Many will even suggest that the pension funds should be the mortgage bank, because you have this liquidity. If we can find a way to organize it.
Well, what the pension funds do, and traditionally they invest in mortgage bonds, which are then lent to the mortgage banks through an intermediary. Pension funds can also have equity stake in a listed mortgage bank that is, sound and well managed, but they don't exist. I mean, there are 2 or 3 listed mortgage banks. I don't know, how well they are run and the financial condition. So that is on the demand side. So once you deal with the demand side, the issue now is on the supply side. But I think in economics, demand creates its own supply. Because if people turn up and there are people willing to pay for maybe 10,000 housing units, businessmen, contractors will rev up. And so we think that the problem is on the demand side. On the housing side, the traditional instrument that has worked in other markets are things like housing private equity fund, okay, or a very well structured housing company issuing a bond that pension funds can invest in. And again, at the risk of not wanting to sound so conservative, these things don't exist. We don't have housing private equity funds. However, we've been speaking to Shelter Afrique, which is run out of Kenya, and they are looking at doing something in that area to set up a housing private equity fund. And we also do not have, well-structured, large-scale developers that issue bonds. The only attempt was UPDC, but UPDC has been in the market for a long time. Unfortunately, they focus on the high end of the market. The market in Nigeria is at the medium to low end of the market, where you can have 20 million, 10 million houses built at a mass level.
I think there's an opportunity for the Minister of Infrastructure to lead the way in terms of just organizing all stakeholders here. So the pension funds, calling for investments from abroad, from local investors, reorganizing the markets so that we can fix this thing. Because while there are so many challenges, I think it's such a huge opportunity for Nigeria.
Yes, so again, this was discussed at our retreat with the infrastructure minister, and what we said to him is that, look, we need to fix the value chain. If you start with the mortgage banks, we need to have 1 or 2 mortgage banks that are properly financed, that are well capitalized and can meet the requirements of mortgages. We need to have good developers that can come up with these housing schemes. We need to have contractors that have the resources and the capacity to deliver housing at a mass scale. We're not talking about building 10 flats in Ikoyi of here. We're talking about building 5,000 housing units, 10,000 housing units.
And
in places like Akwa Ibom, we have in Shelter Afrique a company that have the expertise. You know, last 2 weeks ago, we're in Accra at the African Pension Funds Summit. It's something they've done in Ghana. They have 2 mortgage banks, but they are delivering houses, even though it's a small country. So I think that model works. You know, so, and at the end of the day, you need companies, you need employees that can access the mortgages, offtake, buy those houses, and pay every day. You know, this thing is not rocket science. It's been done many, many times over everywhere in the world. And if the bedrock of any modern economy, home ownership, jobs creation that comes from home ownership, construction, drives most economies.
And that was Dave Uduanu, Managing Director, PAL Pensions.